Great. Good morning, everyone, and thanks this morning for joining us for yet another webinar for the month of March. I'd say good morning and happy new month, to everyone. Abigail, good morning. Happy new month to you.
Good morning, Sam. Happy New Month.
Yeah, very well. It's good to see you again. And thank you very much, our audience, for joining us today for another session where we'll be talking about some quite interesting things happening in the space of the Nigerian capital market. But of course, before that, you know how it works. We do a bit of review of what has happened in the month of February. And then beyond that, we move forward into other things that we expect to also pretty much happen in the short to medium term, especially as we walk into the month of March. Later today, after that review, we'll also be having a fireside chat with one of our executives here at Norrenberger. And his name is Oladipo Olakunle Jinodu. He's the head investment banking for Norrenberger Advisory Partners Limited. Of course, we'll be having a conversation with him at some point today. But before that, we'll go straight to the conversation for today, which is pretty much what has been happening around the globe and in the domestic market. And I'll start with the global market, right? Of course, our vision here at Norrenberger Financial Group is to be Africa's leading group, simplifying wealth creation and driving sustainable prosperity. Of course, E first, excellence first, every time. Moving to the global market, there's been quite a number of things that has happened, especially in the last few days. And as you look at the slide in front of you, you see pretty much Donald Trump and Ali Khamenei being at the facelift of our projection. And that's because a number of things over the week has been between the US, Israel, and Iran, one of which has involved a number of missile launch across different regions. Of course, one of them has led to the death of the supreme leader of Iran, that's the person of Ali Khamenei. And beyond that, we've also seen neighboring countries around Iran also closing their airspace as a result of some of this missile attack. Iran also, on the other end, has also threatened again, counter measures against Israel as well as the US. But looking at numbers, right, US general inflation eased to 2.4%. On the other end, we saw in terms of economic activities expanding to 1.4% in Q4 2025. The same way in UK, we saw inflation cools off to 3%, while the economy expanded slightly by 1% on a year-on-year basis in Q4 2025. On the African region, we saw the Central Bank of Kenya cuts its benchmark interest rate, at least by 25 bips, while we saw inflation again easing in the same Kenya to 4.3% in February. Moving to Asia, we saw the South Korea's inflation also easing to 2%, while China's inflation also slowed significantly to 0.2%. I think one of the major takeaways from this slide is that we are gradually moving towards a point where inflation is slowing across the globe, as we see both in the US, Asia, Europe, and then in Africa, as we also see in Nigeria, where inflation has also moderated in recent time, continue to pretty much support the chances of further interest rate cuts across different regions in the world. But as a result of some of these activities that we've seen, especially in the last week of the month of February, we've seen quite a number of movements across commodities market and across also investment markets. You see Brent crude across about $79 per barrel, of course, following nuclear conversations between Israel, US, and then Iran. We've also seen gold prices also hit around the region of $5,400, right? And quite a number of things have happened across different markets. So things like natural gas also gaining 4.1% in the last week, but of course, on a monthly basis has lost 10%. Gasoline has gained 25.9% in the review month, bringing it year-to-date gain to over 40%. Again, look at silver and gold, see year-on-year growth around 203%, and then 87% also year-on-year. But when it comes to year-to-date, you see 25%, again, 34% for gold and silver, respectively. In terms of markets, most of the markets in the US have pretty much dipped. S&P 500 losing 1.4%, Dow Jones losing 0.87%, Nasdaq Composite losing 3.92%. Of course, as a result of these conversations, the number of investors also fear that this could have some adverse effect on the US, as we also see some other nations trying to cast aspersions around how the US is exercising power over other regions, which again, in their view, is not in line with the United Nations understanding and treaty. I'll move over to Abigail as she takes us on what is happening in the Nigerian markets. Abigail.
Thank you so much for that, profound details in respect to the global economy and global markets. So moving into the Nigerian economy, right here we can see our economic dashboard and how, we are beginning to see the dividend of, the types of the very thick reforms that this administration had implemented, earlier as far back as 2023, 2024. Now our inflation, the situational trend is now up to 10 months now. We've had 10 months of disinflationary trend. Our exchange rate has been appreciating significantly. Except for last week, right? The week ended on Friday, where we saw slight depreciation in the exchange rate, right? We've also had, external reserve, growing, and it has grown to a robust number of, about just slightly below the $50 billion. PMI also growing, and NESD and MGX will go, into details when we get to domestic market dates. NPR also would dive deeper into that shortly. But overall, right, the Nigerian economy is shows growing broadly, right. In the next slide we see PENCOM, right. The PENCOM, right, raised equity investment limits for PFAs, right, particularly for Fund 1 and Fund 2, right, raised it to about 35 and 33% consecutively, respectively, sorry, and that has greatly impacted the Nigerian equities market, shooting up the gains in the equities market and then encouraging both other institutional investors and also retail investors, bringing in their funds into the market, right? We saw the impact of that about 2 weeks ago, right, back to back in the equities market. We also saw that last week the NGX released a notice, right, suspending trading of Zichi's agro-allied shares, right, based on the back of their shares growing by over 700% in the year to date, which is quite outrageous. So the NGX suspended trading on that shares, so that they can perform some investigations. The MPC also, gathered the CBN through the MPC cut the interest rate by just by 50 basis points, which is a cautious approach, right? Even as like I said earlier, the Nigerian economy has been experiencing or receiving the dividend from those reforms that we heard earlier, right? However, the MPC has chosen to maintain a cautious approach, right, in respect to the Nigerian benchmark rates, right? All other parameters, policy parameters were kept constant, but the benchmark rate was cut or reduced by 50 basis points. Also, a very, very, very important news was also the Nigerian GDP report, right, that came out late on Friday, and which showed us that the Nigerian economy grew by 4.07% in Q4 2025, which has now put the value of the economy at above 400 trillion naira as at totally for 2025. And it's worthy of note that for crude oil, now we've had for the total of 2025, the growth that we saw in the oil sector for 2025 is now about above 8%, which is significantly higher than 5% that we saw in the year 2024. And also worthy of note is the fact that the crude oil sector, or the crude oil oil refinery bit, sorry, was negative in 2024, which has now moved negative 14% and thereabout, has now moved into positive of that figure. It's coincident that is now in positive 14% as well for 2025, which can be related to Dangote refinery and all of the good works that have been done there. And also, the financial sector has also grown by about 7x, right, from what we saw in 2024, also in 2025. In the broad sector, in respect of the broad sectorial structure, I mean, in respect to agriculture, service, and industry, service sector still plays a major role when it comes to contributing to Nigerian's GDP of about over 50% in that regard. And this has been the case for some years now. We also had Nigerian public debt, rising and hitting over 150 trillion naira in Q3 2024, according to the information that was released by the Debt Management Office. Right, so I want to go back to Sam now for.
All right, thank you very much, Abigail, for that. We'll move to the markets. We'll talk about fixed income markets, short term first before going into long term. And pretty much quite a number of things have happened, but I think the major takeaway from that is that interest rates have now moderated. If we remember at the beginning of the year, we had mentioned that we project interest rates across the fixed income market to start taking a dive, of course, which we also anticipated that we start seeing a lot more interest rates cut on the back of inflation moderation. And then we're already seeing that play, right? We had two treasury bills auctioned in the week and during the month, I mean, the 4th of February, we had the 364-day close at 16.9 compared to the previous auction, which was about 18.36. That was a steep dip. Then you move to 18th of February. We also saw that also move further down to 15.9. If you look at the treasury bill chart by the top, at the bottom right of our display, we see that yield have also generally trended downwards, while at the OMO market in terms of OBB and overnight rates, there seems to not be so much in terms of changes in the last 2 months. Moving to the long term, right, see bond yields, right, for 28th of February, it just shows that the curve still remains inverted. But again, we expect some level of flattening at some point in the year towards the mid of the year. But of course, generally, interest rates have slowed. And as we've also seen from the bond yield, yield have also moderated significantly from where we used to be, even compared to January 2026. Again, we had one auction in terms of bond issuance during the month that saw subscription of around 851 billion, 874 billion, and 974 billion, respectively, almost taking us to around 3 trillion naira. And of course, the marginal rate for the three issuances were pretty much average around 15.5 to 15.7.
All right, thank you, Sam. So on the Eurobond
Percent.
basis, like Sam
I
has.
will move to Abigail, please.
Thank you, Sam. On the Eurobond basis, right, I'll be feeding on the global news or the global economy updates that Sam already gave earlier, right? We've seen that at the Fed meeting held in January, right, the interest rate was maintained or held, between 3.7 and 3.5, sorry, and 3.7, right? While the Fed is scheduled to hold their meeting in about 2 weeks from now, right? We had the PPI, that's Producer Price Index, being released last week, and that showed some increase in that number, which we expect that will or influence the Fed decision in about 2 weeks time, and subsequently also feed into the prices or the performance of the Eurobond trend or the Eurobond yield curve. So moving into the domestic equities, like I said earlier, the gains that we saw most of the gains that we saw for the month of February, some of the gains was based on the increase in the PFA, in the equity beats, for the pension industry, for the PFA guys, right? Although lately, right, especially yesterday, we saw a week on week decline, the NGX, right, of over 1%, right, about 1.11%, week on week decline. That's to say that the Nigerian equities market is beginning to, see some slight correction, and investors are beginning to take profits on some of this stock, right? That are significantly gained over the months, sorry, so far this year. And but so far, right, yet so far for the month for this month, the NGX has gained over 16%, right? Majorly on the back of growth in large cap stock or stocks like MTN, Dangote Cement, Boa Cement, Seplat, and also Nestle, right? We have gainers and losers, right? Also shown by my right hand side, of the presentation. On a sectoral basis, the oil and gas sector is still leading the train, largely on the back of gains on Seplat. Right, Seplat has been the one influencing the gains by maintaining the oil and gas index, followed by the industrial index. Of course, that is on the back of Dangote Cement and Boa Cement as well. Um, we've also had some gains in the NGX in the banking sector as well. What you have noticed is the increase or the good performance that we've also been seeing back to back in the NGX Lotus as well, and also the NGX 30. So we'll be talking about our non-major consolidated watch list, and Samuel will be taking.
All right, thank you very much, Abigail, for that. And as we always do during this session, we try to show our equities watch list and what we think going forward. Of course, this is the updated figures for the stocks that we currently watch across 4 different portfolios. We could see that a number of them have had relatively good gains, except for Ella Lakes and CI and Boa Foods, which have dipped about 3% and 1% respectively. But aside that, we've seen quite a number of these stocks do well from a year-to-date point of view. And our recommendations are also attached. You see for quite a number of them, they're still accumulate, buy, hold stands, for the exception of one, and that's Fresco, and that's because we see the current price overshooting already the target price, and we think at this point there's already gained quite a lot this year already. We think that we might start seeing some profit taking in that area, and a number of investors might try to start selling off from there. The chart afterwards shows our different portfolios. Remember, we mentioned we had 4 different portfolios that is being managed by our asset management business as well as our securities business. And the first one is the NCSI, which has gained 24.8% compared to January, when the last time we came here, it was just about 6.84%, which means this has gained a little over 18 percent points the last 1 month. Defense stocks have also seen 27.44% from 5.8%. So even as of the last presentation, what it tells you is that if you have invested in this defense stock, for example, you would have gained somewhere around 22% or 21% ish. Dividend yielding stock have seen gains around 36% compared to 12.6, while growth is somewhere around 32%, 14%. Growth was the highest gain in amongst this portfolio before now, but some of the sell-offs that we've seen in a number of growth stocks following the suspension of ZICHs, we saw a lot of profit-taking activities as a result of that. For those low cap stocks, and that has impacted the growth stock, but still remains resilient at 32.58%. I think on this note, it's safe to say that we have done justice, Abigail, to the presentation. I think we can move over to the fireside chat now, because I think Mr. Oladipo Olakunle is itching to give us some insight as to what is happening in the capital market. Abigail, please, over to you.
Thank you, Sam. Indeed, I totally agree with you that we've done justice to financial market review for the month of February 2026. On that note, I'd like to remind you that you can send questions. You can send your questions through to us, right, through the Q&A box. So you see an icon just beneath on your screen, so you can use that to send in your questions, and we'll take them in the course of the session, right? We have with us, like Sam already introduced earlier, Oladipo Olakunle, the head investment banking, Norrenberger Advisory Partners Limited. Thank you for joining us, Oladipo.
Good morning. Thank you for having me, Samuel and Abigail.
Thank you, Dipo. Happy New Month to you.
Thank
Right.
you.
For this month, right, aside the review of the financial market, right, for the month of February, the focus for this month is, leveraging Nigerian capital markets, for wealth creation, which, as you may know, right, for our audience, that is the first core, right? That is what he knows how to do best, right? So we'll be, asking him some questions in that regard. So, therefore, how would you, describe the current state, and momentum of the Nigerian capital market?
Once again, thank you for having me. The Nigerian capital market has been extremely volatile over the last few years, right, with different fiscal policies directly affecting it, especially around macroeconomic reforms, the FX situation that occurred last year, interest rate adjustments led by the Central Bank of Nigeria. And as such, currently, in my opinion, I think that the capital market is going through what I would call like a repricing and normalization phase. We witnessed a slight drop in MPC from 27 to 26.5, and that is immediately going to trigger into interest rates in the coming weeks. Now, for me, some observations have been around equity. The CBN has aggressively pushed for the trillion naira economy and has also pushed the banks and for recapitalization. And so the equities market has since showed some level of renewed depth, across the market, and that is largely supported by the banking recapitalization with foreign portfolio also coming into play and a lot of investors coming out of their shell. We also have the fixed income market still remaining extremely attractive. Yes, rate has dropped below what it was at the same time last year, but aggressively so. We believe that the market is also poised to raise more capital, and there's a lot more engagement from all parts of the entire economy, from institutional to retail. So across board, I would just say it's a general positive momentum, for the capital market, and there's a lot of capital flowing in the economy, and there's a lot more improvement to come. And so I would encourage everyone to watch this space intently. Thank you.
Quite interesting, Diko. Thank you. So now with the NGX, now admitting commercial papers to its platform, how significant, right, is this development for market liquidity and wealth creation generally to the capital?
I'm not going to pretend to be an expert on that, but what I would say is that from where I stand, I mean, the whole point of being able to list any instrument on the NGX is to sort of guarantee its liquidity status and some level of transparency. And whilst I think that already occurs to a large extent for CPs, right, the NGX has an entire base and network to propel this a lot further than we can imagine, right? And so whether or not it's going to improve the liquidity, I cannot speak to that yet, because I would like to imagine that a lot of institutional investors at least hold a lot of CPs, which are short-term instruments, to maturity because of the rates, and based on volatility of the market, right, they might want to hold on to those rates longer, because in the long run, we also hope that rates decline so that MSMEs and SME business can thrive. So for me, it's a good step, right? And as much as it creates transparency, I'm also eager to see the effect, especially on our retail investors.
Thank you, Diko. Over to you now, Samuel. Now, right, commercial paper activities has strengthened significantly on a year-on-year basis, with primarily with primary issuance in 2025, right, reaching close to 2 trillion naira, compared to just a little above 1 trillion naira in 2024. What are the key factors, that were responsible for this momentum that we've seen?
All right, thank you very much.
This is Sam's question. Oh, apologies.
Yeah, sorry. But of course, you can always chime in even afterwards.
Go ahead,
You are our
yes.
guest today. So Abigail, you're right. You've seen significant issuances in terms of CPs and compared to bonds, and it's really a no-brainer. What we have experienced in 2025 is also similar to what we experienced in 2024, and that's because interest rates are high, right? I don't think any business would want to lock in high cost of debt for a long time. And that's what you have seen most businesses do, right? They would rather do CPs for 270 days or less than that, or 180 days, right? In a bid to not have to, of course, tie in too much cost at 22%, 23%. It's better for them than to do bonds where they have to pay, they say 17, 18, 19%, or as long as 5 to 10 years. And of course, the anticipation is that interest rate will slow as we move along in the short to medium term. So of course, you don't want to, again, tie in that much debt at a high cost. And pretty much that has been the main reasons why we've seen a lot more issuances in terms of CPs compared to bonds. And of course, what's the alternative to bank? How they borrow? Of course, don't forget they're trying to not shore up their prudential limits. As of last year, June, we're already seeing the banking industry NPL somewhere around the region of 5%, which of course you remember that the threshold is already 5%. Somewhere around that month, we saw it around 5.2%. It's already a cause for worry for most of these businesses in this area. So of course, you start seeing them being quite selective in terms of who they borrow and how they borrow. And the alternative is the capital market, right? And I'm sure people will be able to speak to the amount of CPs, the number of businesses who are now coming up with programs, of course, as well as different series to raise capital from the capital market through most predominantly in recent times through commercial papers.
I mean, yeah, so Sam, you're very right on that. And I think what has also happened for this increase in primary issuances is that a lot of MSMEs have always assumed that they couldn't approach the capital markets and it was only for the big players. And what we have seen change, especially now in the agro-allied businesses and the commodities businesses, is that there's increased participation because there's a lot more awareness. And so that increase you're seeing is not just from the regular market players who are regular CP issuers, the likes of Dangote, but what you now have is a creative sector of other issuers coming into the market, bolstering up these numbers, as you say. And I expect a significant increase in these numbers as we go on by, and largely also because, as Sam said, bank rates are killing some businesses right now, and capital market now looks and has always been the better alternative. Thank you.
Thank you, for that profound response, Sam and Dipo. So Dipo, I'd like to ask you, although you made mention of it slightly while you were answering, this last question, but I'd like you to, talk, really right on the key trends that you have noticed in the across commercial paper issuance, right? So first, talk to us about the major trends that you have noticed and what major CPs, commercial paper opportunities, are currently in the market. Giving NEMLs, NAPLs strong execution across commercial paper issuances.
I mean, just like you've alluded to, I've mentioned, right, the way it is now in the current Nigerian space, right, investors are more prone to short-term instruments. And when I say investors, I'm not talking about retail, which used to be the only one focused on short-term gains, but institutional investors, including PFAs, are eyeing short-term instruments, are eyeing equities to bolster up their portfolio. And the PENCOM has been gracious enough, to allow some leeway in that spread. And so what you now have is more participation from different groups, right? So like I said, there's more awareness. And so we're not limited to just the organic and conventional vanilla institutional investors. We now have the non-interest commercial papers also playing in the game, and a lot of non-interest instruments also being allowed to participate even on a PFA level. So what you now have is increased participation, which I think of all the CPs that has been issued in 2026 so far, all of them have been oversubscribed significantly. And that speaks a lot to participation as well as exposure and reach of CP. And then, like I said, qualification of CP as an alternative to bank loans, especially from the SME and the MSME sector. Another thing is also concentration, like I also mentioned. Now you don't have participation solely from the conventional places, but there's a lot of agro-aligned entities and industry playing in this space now. And, they are taking the commercial paper route, and they're taking the commercial paper route as aggressive alternatives to LCs and bank loans. And so it's a good trend in the capital markets on various levels, whether you're retail or institutional. And so, with NEML and or NAPL being within the NFG group, right, we're well positioned to continue to disseminate information about, new offerings and giving our people, both staff and customers alike, opportunities to invest, as these offers come on. And we'll continue to push the market, we'll continue to structure and make our way as market leaders in this front. Thank you.
Thank you, Victor. Thank you. So we already have questions coming in, questions being dropped in the Q&A session and also in the chat box. So I'll ask one after the other. I'll ask Samuel some, and also I'll ask you, Victor, as well. So the first question is for Sam, right? What is the market outlook, for March? I'm thinking this is across the global and domestic market as well, but what's the market outlook for March? I can see this question in the chat and also in the Q&A section. So we'll just take it together. And it's similar to Olusegun Oladide's question as well, which says, are we likely to expect a nosedive in the equity threshold? Samuel.
Yeah, thank you very much, and thanks for the question. I think I'll start from the global side and again bring it down domestically. So what we've seen already in the global market is things around the war, or like I say, the different missile launch between the US, Israel, and then Iran. At current levels, right? If you remember at the early part of this presentation, we already saw crude oil prices, Brent specifically, somewhere around $79 per barrel. I mean, if that continues, of course, because Iran plays big in the oil market, and beyond that, we also have other neighboring nations who also play big in the oil market. And what that does is that it affects supply. And if supply is being affected, of course, supply is lower than demand, and prices surges, and that's pretty much what we're seeing. And left, right, it has both positive and negative impacts on the Nigerian market. From the positive end, Nigeria is also a crude oil producer, so it means that we're able to earn more from crude oil receipts. But on the downside is that because we are now pretty much operating a market reflected price mechanism for our diesel and petrol, means that we could also see increment in terms of the energy prices. And if that happens, some of the gains that we have recorded in terms of inflation in recent time, we might see some kickback in that area, because of course, don't forget that energy still constitutes relatively significant part of that basket. In fact, some of the high levels, the drag that we still have in terms of inflation so far is as a result of energy and as a result of diesel and petrol or transportation, both of which also have ripple effect on other commodities like food, health, education, and whatnot. So again, it's something to always watch. And we also know that the government has mentioned over time that we're trying to diversify and trying to see how we could save ourselves from the shocks of the international market. I don't think we can fully save ourselves. Even with Dangote Refinery operating at full capacity, he is also going to price his product as a result of, based on what is happening in the global market. So I think that remains something to watch. The local markets, the local economy, fixed income expects that interest rate will continue to taper, moderate. What we've seen in the last few auctions is that the very short term, for short in terms of things around T-bills, we're already seeing interest rate higher at those points compared to the 1 year bill, for example. So it looks like even the DMO they intentionally want to keep very short-term interest rates, 91 day and 180 days higher. Of course, they are able to bear that cost at a very short term while keeping the long end of that curve, which is a 1 year bill, lower. And again, what it signals to me is that interest rate will slow significantly in the coming future. Of course, the CBN has announced that the next meeting is until May. So what it means is that we might expect status quo between now and then. Moving away from that, go to the equities market. A lot is happening. Aside from the whole Zichi suspension and the fact that the CBN is looking into price manipulation in the market, I think the market will remain bullish. We did some analysis some weeks back where we did an estimation of how much is expected to enter the equities market just from the pension fund, and that was somewhere around 1.4 to 1.6 trillion naira, and that is assuming the figure from December 2025, which of course as of now is even higher. So it means that funds will continue to find themselves into the equities market, and the beauty is that because of the way PFAs is regulated, those monies will find themselves mostly into fundamentally sound stocks. And in recent time, we've also seen financials of some of the companies listed. We saw the likes of Dangote Cement, the likes of Boa Cement, release their financials, even the likes of MTN, and we're seeing interesting dividend payments. So I think right now what you find is selective buying when it comes to stock, where investors are trying to now position themselves to be able to earn some of these deals. But generally, the market will remain bullish, except for those pockets of sell-offs where towards dividend payment period, or when you start seeing some of these qualification dates for some of these fundamentally sound stocks, we get to those points. You see a number of investors try to take profit, of course, at those points. But generally, our outlook for the market is still quite bullish.
Thank you, Samuel. And I think that by extension, you already answered the questions that state how will recent geopolitical tension impact the Nigerian capital market in the near term. You did great in answering that question. So we have another question, and I'd like to show this to you, right, Deepo. We have seen a significant growth in commercial paper issuances, and this has become a viable source for short-term capital. Right, Deepo, do you think this will impact growth of bank lending?
Do I think it will impact the growth of bank lending? Right. I don't think so. I think the whole point of having alternatives is options, right? So the banks are institutional and they are not going anywhere. They are also the backbone they are the backbone of a lot of institutions as well, because your bankers are the biggest support you get, especially when it comes to lines of credit. So institutionally, I don't think so. What is happening is organizations now have other ways of reducing their cost of capital, right? And as any level-headed organizational leader would do, you would do your best to reduce your cost of capital. So the bank would always be there. I do not think that it will impact the bank at all. If anything, I think it leaves more room for other people to also approach the bank, whilst some institutions are focused on the capital market. So the bank is a strong driving force and backbone behind the economy, and I don't think will suffer any damage at all.
Thank you, Deepo. Thank you. Someone, do you have anything to add to that?
Yeah, I agree with you. Right. But again, what I would probably want to add is the fact that during the last MBC meeting, the CBN governor had mentioned that over 4 trillion naira have now been fully registered, right, as part of the recapitalization for the 20 banks that have met their recapitalization threshold. And what that means to me is that the banks now have a lot more capital to deploy, either through borrowing or even through business expansion. One of the issues that you might find most times is that some banks might deal with issues like single obligor limit, even beyond banks. Some other credit giving institutions also have those issues. But of course, when you have that big or a bigger capital base, it gives you that leeway to be able to do a lot more borrowing. So I think not necessarily associated with CP issuances, right? the banks would, of course, have to increase. They have to sweat the monies that they have raised. And one of the ways would be through giving out credit facilities. But of course, you might now see them being quite selective in terms of the level of risk that they're able to take on based on different sectors and the risk associated with them. I think that's what we'll probably see, but I expect increased borrowing from the banks going forward.
Thank you for that addition, Samuel. So Deepa, I'd like to ask, right, as we round off, I know that most people, of course, commercial paper have, a higher interest, right, higher returns compared to, returns from T-bills, and bonds and investment issuances, right? However, on the back of that, right, investors are still quite skeptical, particularly when we see commercial papers from companies that are not names that are not so known. So how would you advise investors? How can they, mitigate this risk, right? And what other key risks do you think, they should be mindful of?
So I'll put it like this. For every investment decision, you have to do your risk qualification, right, of that investment. What a commercial paper does is that it provides some level of comfort that professional parties and regulators were part of the process of that issuance, right? And so when you have a CP in the market, you know that some arrangers or investment banks have put their heads together, legal, as well as the regulators, the FMDQ and the SEC, and have okayed this issuer, right? On the back of that, that issuer also has a credit rating, which essentially communicates to investors that the issuer has a potential stable outlook to be able to come to the market, and they won't be able to come to the market without that rating as well. And so when you see a CP, there's some level of comfort for an investor to be able to invest, but that does not stop you from doing your due diligence the right way. That does not stop you from engaging with professional partners and educated partners that understand the capital market. That does not stop you from also personally doing even if it's just a general internet search of the organization, because whether you like it or not, a CP is unsecured and largely based on the cash flow of the issuer. So yes, you have the comfort of it being registered with the SEC and following due process, as well as having a credit rating. But you must also understand that you must do your own risk due diligence for every issuance before you invest. But I would also like to add here a little bit that organizations that issue out CPs would also do everything in their power to ensure that there's no level of default, because that affects them aggressively negatively as they are not able to come back to the market. And so when you see a CP, you also have this level of comfort knowing that the issuer will do his best to not default so that it does not ruin its own market reputation. Thank you.
All right, thank you very much, Oladipo, for having this chat with us. I think, Abigail, you'd agree with me that it has been quite insightful this morning. I think FML should be one of the things that people should look out for every month, because what it does is it charges you up for the new month and it helps you to know what to do and where to invest. And we have one of the questions from Timothy Olufayo. He is talking about not being allotted for the rights issues that he has done for Zenith Bank and FBN. So I've spoken to our securities business, and they had confirmed that allotment had been done, but for some people, registrars have not actioned it. So I'm sending you the email, the client service email, that you can just send an email there, and we'll take it up with the registrars immediately so that you can be allotted. Timothy, I hope you get that. Again, thank you everyone for joining us for this session where we're talking about leveraging Nigeria's capital market for wealth creation. Thank you very much, Oladipo Olakunle Jinadu, the head of investment of our advisory business. It's been quite illuminating to have this conversation with you. Thank you, Abigail, also for doing this with me every month. To our audience, thank you very much for joining us this early morning. For those in Lagos, I'm sure you might still be in traffic, but then again, it's good to have this conversation even while in traffic. We'll see you again next month in April, where we'll also do a deep dive into what is happening in the Nigerian economy, global markets, the Nigerian market, and also give you outlook of what we expect to happen in the month. Up until then, do have a wonderful week and month ahead. Good day.